Session is Mr. Praveen Kamat, General Manager, Division of MIIs, Division Treasury, Finance and Accounts, and Division of Cybersecurity, IFSCA. And joining him are Mr. Nehal Vora, MD and CEO, CDSL, and Mr. Vijay Chandok, MD and CEO, NSDL. Welcome, gentlemen.
So today we have two very illustrious personalities from the capital markets in India. I'll take a short moment to introduce both of them. Mr. Nehal Vora here is MD and CEO of CDSL. Like me, he's an ex-SEBIite. He joined SEBI in 1996 and quit SEBI in 2006 and moved on to other roles in Merrill Lynch, BSE, and now in his current role in CDSL. I have known him since 2008 and he has been part of various SEBI's committees which have given a lot of critical inputs in drafting of SEBI's policies and regulations. I joined SEBI, by the way, in 2008 and I quit in 2023 to join IFSCA full-time. Mr. Vijay Chandok is the MD and CEO of NSDL. In his previous avatar, he was MD and CEO of ICICI Securities. A couple of years back, I was part of the IFSCA team that had a very intense discussion with Mr. Chandok's team on a VC in which Mr. Chandok was there, and we were enticing him to set up shop in Gift City. He was very, very supportive and very, very cooperative. But little did we know that he would then move on to NSDL after nearly 3 decades with ICICI Group. So with this, I welcome both of you. The depositories, NSDL and CDSL, have played a very, very critical role in laying the foundations of the capital market ecosystem in India. Without the depositories, the capital market in India wouldn't have evolved to a level that it is right now. Often, the stock exchange takes the glamorous part of the market infrastructure institution and the depository quietly does the work behind the scenes. So the depository is never at the forefront, but people do not know the critical role that it plays. Now, if we go online, we'll find a lot of literature about the history of NSDL and the history of CDSL, how both these institutions were set up. But what you won't find online is how the depository in IFSC, India International Depository IFSC Limited, was set up. And since I was directly involved in setting up of these depositories, I'll take 2 minutes to tell you the history. I came to IFSCA in September of 2020. And we had 2 exchanges and 2 clearing corporations in IFSCA at that moment functional. And mind you, this was the peak of COVID pandemic. The global investors we interacted with told us that, look, you have an exchange, you have a clearing corporation, but you don't have a depository. And that's the critical link missing within the capital markets ecosystem. So at that time, Mr. Nehal Vora approached us and he said, I will set up a branch of CDSL in IFSC. So he made the application and in October 2020, CDSL's branch in IFSC was given permission to operate as a depository. Subsequently, I was also involved in setting up the bullion exchange. The first draft of the bullion exchange was vetted by me and my team in October of 2020, bullion exchange regulations. And in that draft of the bullion exchange regulations, there was a portion pertaining to a bullion depository, which means that the gold, the physical gold bars lying in the vault, would be dematerialized using the depository. So at that time, since CDSL's branch in IFSC was operational, we designated CDSL's branch in IFSC also as a bullion depository. Subsequently, in December 11, 2020, the bullion exchange regulations were notified and we had directions from the government that the bullion exchange should be operational by April of 2021. This was the original deadline for setting up the bullion exchange. So we got going. What we didn't anticipate was the second wave of the COVID pandemic, which was really, really bad. Then SEBI came into the picture. SEBI said that, look, your CDSL's branch is going to do a very intense role. It's going to handle bullion and it's going to handle capital markets. So having a branch of an Indian regulated MII will not be ideal. It would be better if you ring fence this depository technologically, financially and operationally from mainland India. Again, we went back to Mr. Vora and we said, what do we do? Are you comfortable setting up the subsidiary here? And this time, SEBI, CDSL and IFSCA, all 3 were together at the table and we had intense discussions. And after some deliberations, we made a call that a wholly owned subsidiary of CDSL needs to be set up in IFSC and it needs to get going. So April 2021, when it was really bad, there were no people on the road here. We all know what India went through during the second wave of the pandemic. CDSL IFSC Private Limited, the wholly owned subsidiary of CDSL, was set up in GIFT. And we gave it accredited registration as a depository. At the same time, a consortium of 5 Indian MIIs, NSE, BSE, MCX, NSDL, and CDSL, this consortium set up the bullion exchange. They created India International Bullion Exchange, IIBX. Now, since IIBX was owned by a consortium of 5 MIIs, we also took a call that let the depository also be owned by a consortium of by the same consortium of 5 MIIs. So accordingly, Mr. Vora went back to his board and he said, look, we have this wholly owned subsidiary. Let us just reduce our stake and let the consortium take over. So each of the 5 consortium partners got 20% each within the depository and within the bullion exchange. So this is how CDSL IFSC Private Limited was taken over by the consortium, and it was later renamed to India International Depository IFSC Private Limited. This is the history. Of course, there's a lot of things, and there's a lot of things that went behind the scenes, and maybe I believe Mr. Vora will mention it in his book when he writes one in the near future. So, my question first to Mr. Vora is this. The depositories in India have evolved a lot. Coming from the days of physical shares where the share certificates used to be kept in vaults. Technology has been a great enabler for the depositories. Going forward, at the pace at which the technology is developing, at the pace at which investors are getting onboarded, at the pace at which securities are coming in demat mode, what do you see the future for depositories?
Yeah, I'm sorry. So first of all, I would really like to thank IFSCA in calling me for this August event. I think it's a great initiative taken by IFSCA, showcasing the central theme that why gift and why should people come here. So really my compliments to the entire team of IFSCA, led by its very dynamic chairman. In terms of, I'd like to answer that in 2 parts. One is, what is this status in India? I think it's seen a great journey. 5 years ago, the depositories were about 3 crores. And the entire foundation of the depository system, ecosystem, was based in 1996. And there was a very important, really strategic call which was taken by SEBI, a very difficult strategic call, that we will move into a segregated account structure, which means that every investor will have an independent demat account with the depositories, which can be identifiable at the beneficial owner level and tagged to the PAN number of that PO. This was why it is so important and strategic, because the world and the successful Western markets were all omnibus, and they continue to remain omnibus. So it was a very bold call that you are doing something different with the focus of investor interest, that the investor should have the freedom to know, to choose, and to change. I think these 3 are very important, and it is at the depository level, so it is in a way insulated from the default or the bankruptcy risk of the intermediaries. So if the intermediary fails, the portability of this is very important. Backed by this, there were certain electronic fintech solutions which got initiated in 2016, but in 2019, it became a B2B business, but a B2C authorization, a first of its kind in the world. What it simply means is that when a transfer of shares needs to happen at the order level, the fintech brokers need an authorization. So rather than having a power of attorney, To the extent if I want to sell 1,000 shares of TCS, I need an authorization of 1,000 shares to be sold. When I need to give this authorization, earlier the DP used to send the one-time password, but there was a risk out there. So SEBI and the depositories work together, and now the OTP is directly sent by the depository to the investor, who authorize it directly with the depository, and then the depository gives a flag to the fintech broker. They can go ahead. This kind of system is nowhere in the world. It's a B2B business, but a B2C authorization. And the second is the pledge system, the margin pledge system. Now, why am I putting these things in perspective? Is that because of some of these reforms, the kind of growth we saw, that from 3 crore total demat accounts in 2019, 3.5 to 4 crores. Today we are at about 18.5 crores. And this has been a stupendous growth, which has been seen in the entire demat space. How is that important from a gift point of view? I think the gift can become a conduit between the Euroclear, Clearstream, DTCC, some of these global depositories, and the Indian flows. I will talk more about it in the subsequent sections. But the segregated account structure and the omnibus structure, the gift can become a bridge between, because finally, Europe is expected to move into a segregated account structure also. And the US is also trying to move account structure. Because from a money laundering perspective, from an integrity point of view, from a surveillance point of view, it is a far superior method.
Mr. Chandok, your thoughts on this?
Yeah, first of all, thank you very much for having me here, and thank you for those words of introduction. I did mention that I was at ISEC and supporting the potential move here, but probably what you didn't mention is that prior to that, I was with ICICI Bank, and I actually had authorized the setting up of the ICICI Bank here, so which is today.
Honestly, I was not aware of this. My apologies.
So I thought I'll just mention that, but nonetheless, thank you for having me here. I think I've really enjoyed listening to the earlier sessions. Big eye opener for me. And here, clearly, I think the IFSCA is doing a phenomenal job in a short period of time to achieve what it has. Building on the same lens that Nehal just spoke about, I thought I would add a few more angles to this as to probably where depositories could potentially be heading. And again, I'll talk from an Indian context, and some of this could probably be relevant here as well. From doing basic stuff that what Nehal described so eloquently, there are opportunities that have started getting explored in the issuer side of business as well. A lot of companies today, through an onboarding portal, can offer depository, gets onboarded. Thousands of companies in Indian context are getting themselves enrolled. Ancillary services, again, I'm sure all of us as Indian shareholders would be aware, EAGMs, e-voting, these are some of the services that are getting extended and offered. So similar stuff could also be looked at. For bond issuers, there's a first of its kind, I think, anywhere in the world, which is the distributed ledger technology, a blockchain-based model for covenant monitoring that has come. Expanding beyond shares and equities, I think a loan proposition of loan against equities and shares, mutual funds, is something that is also available in the Indian context. We have the LRS scheme for investors. Today it is not permitted, but as an opportunity, if the regulations and probably even the government permits, then just like what happens in Korea, where when you invest outside, rather than these securities lying in an overseas demat account, an Indian demat account one of the Indian, either IFSCA or domestic, something that could be considered. So I thought there are several new directions that one can get into. Insurance depository is another space. So these are some of the areas.
Excellent point, sir. To develop on that question, that point, I asked one question in a fireside chat on the clearing corporation yesterday. I'll repeat the question here because it has implications for the depository as well. If you see the structure of depositories overseas, it's a central securities depository. The United States DTCC, Depository Trust and Clearing Corporation, it's a clearing corporation as well as a depository. So two functions combined into one institution. So it does the clearing and settlement of securities, and it also does the safekeeping of the securities. Then you move towards the ICSDs, International Central Securities Depositories. So you take something like a Euroclear or a Clearstream. It is a depository, it is a custodian, it clears and settles the trades, and it is also a limited purpose bank regulated by the European Central Bank. So multiple roles in one institution, and it functions cross-border. In India, cross-border transfer of security is not permitted. In GIFT, we are open to it, but the regulations are coming in place slowly. So with respect to the point on segregated and omnibus account structures, I mean, the entire developed world is on omnibus account structure, and it's sometimes, yes, it becomes a problem during investigations and law enforcement queries for them. We have developed our ecosystem based on segregated account model, and most of the developing economies, Turkey, South Korea, developing economies in Southeast Asia, they're all on segregated account structures. So with this as the backdrop, what do you think is the ideal structure for a depository in GIFT? Is the current structure that we have migrated from India over here with some modifications, is it going to work good, or do you feel that something additional should be done? So my question to you, Mr. Vora.
I think it's an excellent question. I think I'll divide my answer into two parts. First is from a systemic risk point. We are doing this to ensure that the systemic risk in the ecosystem and in the markets remains within certain manageable limits. Now, when you have clearing, custody all under one roof, there is a concentration risk exists. And what I believe is that the current model of depositories, the custody getting divorced out of the clearing and settlement, and the funds part of the settlement being managed by the clearing corporation is a far more superior method, because it decentralizes the risk, systemic risk. It also creates an important broad basing of the critical institutions which are actually executing this clearing and settlement, and more important, the custody function. Number one. Number two, as Jay mentioned in his comments, a lot of the custody related value add services can get a further focused impetus. There is a focused institution which is doing that custodial function, like a DTCC, or means without really commenting on the model they have. You are so bogged down with the day-to-day clearing and settlement function that for you to branch out into something is more nuanced towards a custody side gets kind of a lower priority, because you are managing risk of the system, managing counterparty risk, managing the full innovation risk, and you're managing the custody risk. Important risks which are getting managed by clearing cum deposit. When you divorce this, you can create specified products like a financialization, mentioned the loan against securities product, or you can have the allied services to the and to the investor as three different important stages, which is from a lens of custody and not from the lens of settlement. Second part, which I would like to say, that how did you contextualize it from a gift point, is that whilst you separate structures, you need a kind of an interpreter, because that's where the critical mass and volume is going to come to you. So that's where I think gift has a great opportunity. It's like saying you become an interpreter, somebody speaks French and you are translating Hindi, something coming in omnibus to you, translating into segregate, but is coming back to translating.
Point taken. Mr. Chandok.
I'll just add two bits to this. I think today the regulator permits you to have straddle both. Um, I think the larger opportunity clearly plays out with the segregated structure which has been adopted. But like was pointed out, I think in the earlier discussion, that unlike in a retail context of India, mainland India, where you have large thinking in terms of large number of investors, etc., this is more sophisticated, more limited in terms of participation. Given that lens, maybe depending on the commercial opportunity that could evolve over time, it may not be a bad idea to keep the mind open to straddle both the omnibus and the segregated structure. Same, because I think some of the global custodians are also thinking of having both the segregated and the omnibus models operating. So it may not be a bad idea over time. Something like keeping your mind open on
A
having
hybrid model.
A hybrid model.
Great point. We have 9 minutes, 30 seconds left in the fireside chat, and I trust this topic, 30 minutes do not do justice to this topic, but my next question is to Mr. Chandok. We have recently issued a consultation paper on KRA, KYC Registration Agency, and we do not have a KRA operational right now in IFSC. We have two KRAs in India, NSDL KRA and CDSL KRA. And then you have CKYC by Sarsai. What do you see is the future for a KRA in IFSC? Given that the KRAs in India, the NSDL and CDSL KRAs, they function mostly, cater mostly to the capital markets. In GIFT, it's a different ballgame. You have capital markets, banking, insurance, and the other ancillary services and other verticals. What do you think is the potential of a KRA in GIFT IFSC?
Yeah, I think have CKYC, you have KRA. I've been arguing one is enough because it just makes life a lot more complicated for market participants, market players. I think clearly KRA is a great concept. It has done a world of good because it has actually, in a way, given faster access, easier access to a lot of individuals. You do your KYC or intermediary independent verification by the KRA of all the documents that is stipulated by the regulatory system, SEBI, with prevention of anti-money laundering, entities, and so on and so forth. So you look at that, verify, satisfy yourself, and then you confirm the KYC. Once that KRA confirms, then you don't have to do it again for availing the next service. In Indian context, you have that CKYC because the banking system follows that. The capital markets, in a way, follows in some sense both. Just complicates it. So having this one KYC agency, which KRA, which straddles all products, I think would be a great concept, great idea. At a later stage, or even simultaneously, exploring a multi-jurisdictional exchange and applicability of it can, just like you have the LEI concept, form of, in case of corporates, where you do a KYC and the same thing gets accepted for an overseas investment, or overseas investment has done their KYC and that gets accepted in the Indian context, can make it even. So I think KRA as a concept is a great thing, or time is right. Multiple products, simplification, and I think that's the way to go.
Excellent point, sir. Mr. Vora?
Yeah, so I think this is a great opportunity to distinguish GIFT City and IFSCA as a differentiator as compared to the other financials. Since all the regulators come under GIFT, banking, insurance, pension, and securities, the KRA, the lacunae in the Indian system, for the lack of a better word, can be actually learned, and there can be a common KRA across all your financial assets. So you need to do KYC once, and it is kind of done for all. The second point is that most of the other financial centers have a kind of a reduced KYC requirement. Now, there is a flip side to that. Financial Action Task Force, this could be an opportunity where GIFT can actually state to FATF that despite it being a financial center, but from a money laundering standpoint, takes that responsibility. And therefore, we are different from the other financial. But from the market ecosystem point of view, there is no pain points in fulfilling that obligation because you're doing it only. It is a win-win on both sides where it can create a value proposition for GIFT IFSC as compared to the other financial centers without causing too much.
Excellent points, sir. In fact, last year we had the evaluation of India by the FATF team, and we got very good reviews. In fact, IFSCA team was also met with the FATF team, and the message was sent that there is zero compromise on KYC, which they acknowledged and appreciated. Excellent point. Due to paucity of time, I'll boil down to my last question. Currently, the depository in IFSC, IIDI, is handling bullion depository receipts. It's handling bonds to some extent. Bonds are being listed on the exchange, and in the coming days, when we have equity listing, it will handle equity as well. And if everything works out fine, you will also see a REIT and InvIT issuance taking place on the exchanges with the depository handling the dematerialization process. What do you see is the future for the depository for the next 10 years? As a shareholder and also as a MD and CEO of a depository in India, what do you see is the future and the potential for IIDI in GIFT?
I think I have 3 points, 3 specific points. First one is single demat account. And I think GIFT is, in a way, a regulatory sandbox for the country. That way, a lot of innovations can come in here because you're not exposing it because of lack of capital account convertibility, the retail of the population. So the policymakers are a lot more relaxed in giving some compensations. Second is that since all your banking, securities, pension, and insurance is under one single roof under the regulator, all these assets can actually be made into a single demat account. It has 3 different advantages. One is if the KRA comes in, KYC has to be done only once through the demat account. Further emphasizes the point of simplicity and ease of doing business. Second is the financialization. So the pledging system can actually juxtapose itself onto the demat account. And you can pledge your banking assets to create your securities market assets or your insurance assets or your pension assets or vice versa, leading to a multiple credit creation and therefore each liquidity flowing in each of these assets. Third is from a taxation point of view. Want to have, whenever the tax comes in, the demat account can become the same, which can help the government to collect taxes or whatever levies all your assets are focused. The nomination facility is therefore pop-up. And basically the structured products. So today the structured product markets have not taken off as much as they should. You can have a bond, the coupon linked to an insurance, pension, securities, or a hybrid of. And if you have one demat account, it becomes easier kind of market this and distribute. But then that structured bond can come on. That brings me to my last point, is that we need, IFSCA should have a strategy specifically for the NRIs. I think that needs to be distinctly different from the institute because the needs and wants of are different from NRIs. There's a lot of patriot back to India. GIFT can actually become a great window dual listing coming, how it will pan out, can actually have a India hedge happening.
Excellent point, sir. Mr. Chandok, your take on the question.
I completely resonate with what has been said, and he summarized it extremely well. I think in the mainland Indian context, we crave for what he just said. The best we've been able to probably achieve is the consolidated account statement, where you can get some mutual fund and equities. We still don't get other asset classes. Getting all of that under one roof gives enormous flexibility. First of all, it's great user friendliness from a customer investor point of view. There are great more flexibilities to structure products, cross collateralizing, as was explained. It's more liquid and better management of the entire portfolio. One bird's eye view. So I think one KRA, one demat account is the way to go. Sandbox was a great way of summarizing what India, if it had to redo it, probably would have done it this way. Great chance and opportunity for IFSCA to do this, and given the kind of trajectory, your point on future, I think it's taken in the last 6 years. I'm very, very optimistic that the next 8 to 10 years will probably see IFSC achieve what no other place, place, Hong Kong, Dubai, etc., have been able to achieve in that much time frame of their earlier days. I think it's a great start.
Thank you so much, sir. With this, we conclude our fireside chat. Ms. Dhwani, over to you.
Thank you very much, Mr. Praveen, for doing the honors of moderating the session again. And I would now request Ms. Gunjan Mirani, Chief Risk and Regulatory Officer, India ICC, to present the mementos to the panelists and the moderator.